things like more callback options, like
Okay.
if you can sign up, we'll call you back in
Yep.
the queue. It also means more automation. There are certain things that can be done by pressing buttons versus waiting for a human. And maybe your constituents need the human, but if other people in the queue can be deflected
I
to
got
automation.
it. And one last point before my.
All right. Another Tax Tip Thursdays. Check my audio should be working, but let's go ahead and confirm it here. We'll talk about several things today. All right. Just waiting for the audio check. Shout out to Thomas and Tiana for your help. Thank you for that. Yeah, we're going to talk about that map that's behind me here in a little bit. We're going to talk about that map that's behind me in a little bit. And we're going to talk about that map as well. We're also going to review information about the IRS. So the IRS commissioner made some testimony back in October. I'm going to take a look at what he says. Some of the stuff is kind of interesting considering some of the things that I've experienced with clients. So we'll discuss that in a lot more detail. All right, let's see what we got here. All right, finally, TikTok audio is working. Thank you. All right, so let's get started. This should be working fine now. So first thing we're going to do, actually, before we even get to state income taxes, because what we're going to talk about is state income taxes, right? It's a nightmare. If you ask me, state income taxes are the worst, and dealing with state taxing authorities is even worse, right? So one of the things that we're going to talk about is, in general, how it all works, because there's too many variables to go over all the different variables in 30 minutes to an hour, right? It's impossible. So actually, let me... Yeah, so there's too many variables to go over in a 30-minute video. It's just impossible. So you kind of have to almost handle it on a case-by-case basis, right? All right, perfect. Audio is working on YouTube. Excellent. Okay, so now what we're going to do is we're going to go over just some testimony from the IRS commissioner that he made back in October of 2024. We're going to react to it. There's some interesting points on here that I want to highlight. So let me go ahead and cue it up here so you can see what's happening. And then I'll give you my thoughts on the response and what I think is happening. 1 second.
For the opportunity to testify on IRS operations. I am pleased to report the IRS continues to make important progress in our effort to transform our agency through implementation of the Inflation Reduction Act. Using IRA funding, the IRS has 3 objectives to help taxpayers and the nation. First, ensure taxpayers can easily contact the IRS, whether in person, on the phone, or online, and get help navigating complex tax laws and accessing the credits they deserve.
I don't know when the last time it was that you tried to call the IRS, but I know my experience. So whenever you contact the IRS, or whenever I contact the IRS on behalf of clients, we have what they call a priority service line, right? So basically, it's a separate number that's supposed to be for tax preparers who are knowledgeable, for easier communications, et cetera, et cetera. Okay, so the comment isn't going through on LinkedIn for some reason. That's actually very interesting. So yeah, so basically, there's 2 ways that I contact the IRS, right? Through the tax preparer line, and then there's the regular line that everybody calls. So the last time I tried to call as an individual, it took me, I want to say, about 3 hours to get through to the IRS as an individual. And it was no different as a tax preparer. As a matter of fact, there were points during last year's tax season where they weren't taking any calls. You say you called, they say, hey, we have too many calls, we can't service you, and they would hang up on you. No matter what, they would still send you letters, and they would still send you bills, but you weren't able to resolve it because they were just not taking any calls. So I guess he's saying that, they're trying to improve that. But let's see what else. What are the other goals that the IRS has right now?
2, identify the growing number of wealthy taxpayers, including individuals, large corporations, and complex partnerships, who are shielding income to evade their tax responsibility and collect from them what is owed. And 3rd, address the growing risk of tax scams and schemes by protecting honest taxpayers from them and root out the nefarious actors that perpetrate them.
So did you hear that number 2 one? So basically, well, I mean, he said it as clear as you could say it. He's going to increase audits, basically, to partnerships, C corporations, and I've made some posts about that earlier. So basically, the goal is to increase audits on large corporations or large taxpayers that are not paying their fair share. We'll see how this is all going to play out, but my experience with government work in general, like I said, I was an FBI agent. I was in the military. I've been up and down as a contractor. I've done all kinds of stuff with the government. The government usually goes after the lowest hanging fruit. The easiest thing to go after, that's what they're going to go after, right? And they're going to keep going after it until they get tired, because it's an easy, hey, I'm going to check this box. My superiors are going to love it. That's just the way the system is, right? So in theory, yes, they would go after the higher end taxpayers, but something tells me that that's not how it's going to play out. We'll have to see, how everything works out. But that's one of the stated goals, as you can see, that they want to implement. They also talk about, during this testimony, they talk about the phone calls, right? So as you probably have imagined, or I don't know if you've called, I know I have, and it's been a nightmare calling the IRS, trying to get any resolution whatsoever. It's just impossible. One of my clients actually might have found the hack. I haven't tested it yet, but he might have found the hack around the long hold wait time. So basically what he did was he called the overseas IRS support number and had a conversation with them. And yeah, they're like just sitting around because they're not getting calls to the international number. Usually it's just for the domestic numbers that they get calls. So he said he received service right away, and there was relatively no wait time. So that might be a hack. So you can try to call the international numbers. I haven't tried it yet. I think I will eventually, but yeah. So in this clip, he's going to talk about the phone system and the length. And one of the senators actually brings up a good point, because it happens so often that it's almost become a regular thing with the IRS, right? So let me skip over to that so you can see what the back and forth is. Well, actually, no. First, we're going to hear a little bit more about the phone system. Give me 1 second. And what the IRS thinks is happening with the phone system.
At this point last year, we had an average level of service on the phones of about 14%, and we answered fewer than 9 million calls. This year, after hiring more than 5,000 additional phone assisters, our level of service exceeded 85% during the filing season, and we answered more than 15 million calls. We also improved in-person service at our Taxpayer Assistance Centers, or TACs. Since the infusion of IRA funding, we have hired more than 700 new employees at the TACs, reopened 46 centers, and opened 4 new ones. This has allowed us to serve more than 1.6 million people at our walk-in centers so far this year, which is 18% above last year. We also opened temporary walk-in centers to serve taxpayers who don't live near an in-person center, something we did not have the resources to do in the past. Modernizing our operations is the key to meeting many of our transformation goals, and we're making progress here as well. We are using IRA funding to upgrade our information technology infrastructure and to improve the taxpayer experience for those who choose to interact with us online. For example, we added new features to enhance our taxpayer online accounts, and we recently launched the business tax account, neither of which we were able to do before the IRA funding.
So, yeah, let me check why. So, as you can see, they say they're saying that the Inflation Reduction Act money that they got allowed them to do all these great things, right? Open up a bunch of centers that are in rural areas and open up different and provide more services at the different tax centers. So I've actually done some. I've actually been to some of these IRS offices to resolve tax matters. For the most part, what they tell you is call the 800 number or go online and resolve it, right? Like if you go get a transcript, the first thing they tell you is go online. I don't know if that process has changed. I haven't been to an office in a while just because for me it makes no sense. But yeah, so they're increasing, they're attempting to increase the customer service or customer satisfaction with these additional funds. And the reverse is also true. So when the budget got cut, I want to say like 4 or 5 years ago, whatever, the first thing they did was get rid of customer service so that people can feel the pain. So there's little games played by these different government organizations. They play these little games, and so it's frustrating to say the least. But yeah, so this is kind of the improvements that they're trying to make. We'll see if it pans out here in the future. But
The transformational changes we're making.
so let's see. Now we're going to talk about. He talks about it's a specific example from one of the centers. So let me bring that up because it's actually an example that happens more often than not.
There's like entrepreneurs out there that want to have like a guaranteed chance of success.
Let me see. I wonder why. I'm not getting any drop frames.
Yes, it would be refining lithium as no brainer.
About from my district, because I represent the people from my district today. I'd like to begin by just sharing more about the complaints that I've received in my short time period this year. I have 4 constituents who have contacted my office because they have yet to receive their 2022 tax refunds. Some have thousands of dollars stuck in limbo as they wait for their tax refund credits. Others can't get assistance from the IRS via phone despite waiting on hold for hours. They can't get updates on their delayed refund status. The phone system really seems to be an issue. I have a constituents who run small businesses and say they can't get an answer on the status, not just the status of their employee return on their tax credit applications. My office recently helped a constituent who had trouble with IRS releasing their deceased father's last tax refund. This refund, which totaled $30,000, was finally released after my casework team and the taxpayer advocate service intervened, as well as the accountant. These are just kind of a handful of the frustration from my constituents. Maybe my office is alone on this, and the people on the other side of the aisle have no issues. So just interesting. Although these cases are specific to my constituents, the underlying fact pattern is essentially the same across the country. It seems like the IRS is not performing efficiently or effectively. So my question is, why can't the IRS provide taxpayers with quality phone service, at least in my district? And
Madam Chairwoman, I appreciate the opportunity to respond. First, I think we did have a tremendously improved filing season from 2022 to 2023 as a result of the infusion of Inflation Reduction Act funds. Specifically, we were able to immediately hire 5,000 new customer service representatives and put them on the phones. So for those that called during filing season, and that's the end of January to mid-April, we were able to answer 87% of those calls with a 3-minute wait time. Now,
Did you hear that? A 3-minute wait time. I have never in my life, even as a tax professional on the tax priority line, on the professional priority line, experienced a 3-minute wait time ever in my life. So I'm not entirely sure where he's getting his data or how they're measuring it, but I would say that it's incorrect. And it actually brings up a video that I saw not too long ago from Jeff Bezos, where they were talking about, they were at a meeting, and he had his team there, and one of his team members are like, wait times are about 10 minutes or 2 minutes or something, really, really low. But they were getting a lot of feedback saying that wasn't the case from customers. So anecdotal, basically. So customers would, provide feedback saying, hey, why am I spending 20 minutes on hold, 30 minutes on hold? So he's listening to this guy say, the hold times are X or 2 or 3 minutes, whatever it was. And Jeff goes, okay, well, let's test it. So in the meeting, they called the number, and they were on hold for about 10 minutes, which is way over what they actually wanted, right? So I think if the IRS implements some kind of customer feedback process, they might be able to get more information and better data to work with, because that 3 minutes, there's no way that you're going to tell me that that's accurate. There's no way. Absolutely none. So, I mean, that would be the goal, but there's no way that that's actual fact right now. Let's see what else he has to say.
Now, there's more to do. And some of the issues that you were raising, I was ticking off in my brain different modernization plans that we have underway. So, for example, if you file your original tax return electronically and you give us a bank account that we can automatically debit, for those taxpayers, on average, you get your refund within 13 days. That's what we achieved. But if you don't file electronically, now you're in a paper process,
Which takes longer.
And
totally understand that.
And look, American taxpayers should have a choice. We would love for them to file online, but if they choose to file on paper,
So is your assumption that they're filing on paper, and if they just move to the electronic?
I think that would incredibly improve their odds of getting their.
I'm talking about the phone service. So whether you file electronically or whether you file paperly, if I call you,
Nothing to do with the
I
phone.
still need to get someone on the phone to speak with. I mean, I just met with a constituent that their information, they've been trying to get information from you since February. They said that they would get an answer by October 20th. Somebody would call them back with the status of just an answer. It's the 24th. We still haven't had an answer. I mean, this is a small business in our community. That has to do with customer service.
Yeah, let me offer two things that will help. Obviously, adding more customer service reps, training them, that's all in process. The second thing that will help is modernizing our call center, investing in things like more callback options, like if you can sign up, we'll call you back.
Yep.
It also means more automation. There are certain things that can be done by pressing buttons versus waiting for a human. And maybe your constituents need the human, but if other people in the queue can be deflected to automation.
One last point before my time is up.
Go ahead.
So I think what you're saying is if we can modernize our systems, people would get a return call faster.
Yeah. And
Directionally. Okay.
Absolutely.
If that's the case, then why in the Inflation Reduction Act is only roughly $7 billion to system modernization and taxpayer service, and the other out of the 80 billion, I mean, if that's the problem, goes to enforcement and operational support. With that, I'll yield back. Oh, I forgot. The chair now recognizes
Right, and that's
the
actually
ranking member, Mr. Infume.
Thank you very much, Madam Chair.
hold on. So that's actually a very good point, right? So out of the total budget of 80, 7 only went to customer service. And it's frustrating for taxpayers throughout the country that they have to actually deal with this, right? And I don't know if you caught it, but when he said that they wanted to deflect some of the phone calls to automation, right? So I don't know if how you feel about robots. I've had long discussions about robots, and because I'm also in technology, robots and RPAs or process automations, basically. And you get lost in robot land, and sometimes you just want to speak to a human being, right? And the IRS, from what he's saying, is modernization. Okay, yeah, they're going to try to modernize their call center. But my guess is what's going to happen is they're going to try to push everyone, and it's actually happened already. They're going to try to push everyone towards automation, towards, hey, go to the website, hey, towards, just so that they don't have to actually speak to a human, even though you know you have to actually speak to a human. If you find yourself in a situation, right, where you're trying to get a hold of them, they can't. I mean, there are several things that you can do. One, you can actually go into an IRS office and see if that works. Sometimes it does. Sometimes they just tell you to call the number. Another thing you want to do is contact the taxpayer advocacy group, right? So basically, these are people that help bridge the gap between the IRS and the taxpayer, right? So they have access to a lot of different systems that the IRS has access to, so they can provide you answers without having to call the IRS, but they have direct phone numbers that they can pick up the phone and call somebody to get things done, right? So that's another option. Contact your local taxpayer advocate. Contact your local tax preparer, because and as the senator was saying, a combination of the accountant, the taxpayer advocacy, allowed that those constituents to get some type of answer, right? And then if all else fails, contact your congressperson, right? Whoever is in your district, so that they can help get answers. So eventually, and what I've found, because I've been through that process, you actually do get a response quicker if you go through your local representative. But your first line of defense is that taxpayer advocate, right? Like, go there or call the number, and you could just Google taxpayer advocate and you'll find the number, and then set an appointment, and they can help you resolve those issues, as well as your local tax preparer, right? So this is what happens on the federal side. So now we're going to talk about the state. Now picture this. The IRS has 80 billion to play with. Most states don't have 80 billion in terms of budget for their operations, right? Each state has its own separate rules. So residency rules, reciprocal agreements between each other, and we'll go over what all that means. And what I've found is, personally, I will never move to a state that has state income tax. Never. Because it's so problematic, and in the end, you're not oh, I see what's happening. All right, let me see here. Yeah, and in the end, it's harder it's twice as hard to deal with the state than it is with the federal. So if it's impossible to deal with the IRS, it's twice as impossible to deal with the state taxing authorities, right? So we're going to go over just some basic principles when it comes to state taxes, so that you can understand as a whole what it means and the differences between some of the states. We're not going to cover every state because it's just too much information. So first thing we're going to do is go over to this article here by the Tax Foundation, right? So this was written actually in 2021, but by Catherine Lofhan. I'm sorry if I pronounced the name wrong, but it's actually a good understanding of, and I'll put the link in the description of the video on YouTube. But you'll see that they go over certain things as far as state taxes, right? So, okay, so before we start, let's talk about percentages, right? So there are states that have state income tax, and there are states that do not have income tax, right? So this is a map of kind of the states that have income taxes and the states that don't. So anything in gray, there's no state income tax, right? So I live in the great state of Texas. Florida doesn't have one. Tennessee, South Dakota, Wyoming, Nevada, and Washington don't have one. These are the rates for state income taxes, and usually they're flat fees, they're flat percentages. And usually the city's taxes are also flat percentages. And as you can see, the highest taxpayers are going to be out in California and New Jersey. For whatever reason, they charge a lot of taxes in New Jersey and New York. Minnesota seems to be a higher one, and Vermont, right? And let's not forget Hawaii. So if you're in any of these states, you can automatically count on, like in California, an additional 13% of your income being taxed on top of what the federal government taxes, right? Because I guess they have so many great services for people in California that's what they charge, right? In Texas, we don't have any of that stuff. Now and then there's also states that have different corporate taxes, right? So as you can see that the percentages vary significantly. I mean, North Dakota has a 2.9%, but then you go to California, it's 13, New York is 8, Maine is 7, 6, 5, 6, 5. I mean, that's kind of the average is probably going to be around 6, right? But you can see these outliers are just out there. So for the corporate tax, this is from 2021 again. Different states have implemented different corporate tax. So if you own a C corporation, you're going to pay X percent on that on the earnings of that company, right? The highest, California. Well, actually, no. The highest is going to be New Jersey. So if you want to do business in New Jersey, just know that you're going to pay an exorbitant amount in terms of corporate taxes. So, I mean, if that's what you want to do, you go ahead and do it. I know I don't want to do that. So California is kind of the same. New York, surprisingly, it's a little bit lower than New Jersey, but there's still a tax there, right? And it's still relatively high compared to essentially 5% with some of these states. So I would say from a business standpoint, Texas is probably the best state to do business. And as a matter of fact, they recently doubled. So Texas has something called franchise tax, right? So basically, if your gross receipts are over a certain amount, then you get taxed X percent, right? Initially, it was like 1.5%, and they recently doubled it. So it's actually gone, if you look at this, we'll talk about all this stuff here, but let me see, where was it that I had it? Yeah, basically they recently doubled it. So you have to essentially make over like $2.1 million a year to be taxed on the corporate side, to be taxed in the state of Texas. So these numbers are going to change, and they change significantly. So as you can see, we're going to go over some of those changes here. So not all of them, because as you can see, this is just a lot of stuff. As a general rule, most of the states have recognized, like, hey, a lot of people are leaving our state because of this tax situation. So we need to lower our taxes. So a lot of states have decided, hey, you know what? We're going to go ahead and lower it, with the exception of California, which increased it from 2023 to 2024 on the personal side to 14%. No change on the corporate side. Georgia went down, Indiana went down, Iowa went down. So you can see a lot of the states have gone down in terms of percentage. Michigan went up for whatever reason. They're charging more for taxes. Missouri went down, Montana went down, Nebraska went down, New Hampshire went down, North Carolina went down, Ohio went down. So a lot of states have gone down on their individual and their personal, in their individual and then their corporate taxes as well. So that's always a good sign. But then on top of that, and if you live in multiple states, it's going to be, if you live in multiple states, it even gets more complicated, right? We'll go over that here in a little bit. But this is the corporate tax information, right? So kind of the same thing here, down, 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 down. Overall, they all went down with the exception of several states like Michigan, right? That one went up. Okay, so then that's just on the income tax. So there were sales and use taxes. One state in Kansas will significantly reduce its grocery tax, so that changed a little bit. Property taxes. So there were some changes with the property tax rules in certain states. Texas actually approved a bill to increase the homestead exemption. So basically what it's saying is we won't tax X percent. So if your property is X, we won't tax that, right? So if you look at Proposition 4, which is what was voted, 83% of the people approved it, saying, hey, you know, we need some relief in terms of property taxes, business taxes, and district taxes. So essentially those taxes are going to go down in the state of Texas. There were some other bills that were approved, so requiring state and local governments to provide evidence that regulation of generally accepted farming and ranching practices is needed to protect the public from danger. Allowing cities and counties to exempt child care providers from property taxes. And that approved. So if you're a child care provider, it's going to help in terms of property taxes and you own the property. This one, I think it's important. Forcing lawmakers to ask voters for authorization before they could impose any new state taxes on residents that would be based on net worth or wealth, right? So they're trying to prevent this whole, within the federal government, that there's some people that are trying to tax wealth, like net worth. Well, the net worth calculation can be really complicated. So Texas is saying, hey, look, if you do want to do that, you need to ask for permission from the taxpayers and we need to go to a vote. So that's what this is all about. And then, of course, the homestead tax cuts, which if you look at the rates here, let's go to here. So this is the property tax, the state of Texas. So for the $40,000 general resident homestead exemption, you may submit an application for the residential homestead exemption. And so what they do is they say, oh, okay, based on your appraisal value, you don't have to pay taxes on your property under X amount, right? So they've actually increased it. Initially, I think it was 10,000, and now it's actually 40. So that's good for people who own homes. So yeah, so a lot of different changes within state income taxes. Another thing that you want to kind of keep in mind when you're actually looking at state income taxes is your tax home, right? So you have to determine where your residency is during any given year. That is also a nightmare to deal with because every state has different rules. So let me see if I can find it here. Yeah, so every state has different rules, and this is the matrix for that, right? So, this is actually the reciprocal agreements, but let me go back to residency. Okay, yeah, so this is the one that I wanted to talk to you about. So every state has different rules when it comes to residency, right? Some states, as a general rule, anything over 183 days deems you a resident of that particular state. So if you are living in a state for more than 183, chances are that that's what determines where you're taxed at if you're a state resident, right? But some states are different. So this state says spend more than 6 months in a tax year in Arkansas. Here's if you're living in California or are a temporary resident in California, it becomes taxable. Here it's 6 months. Here it's 183 days. There it is. DC 183 days. Here in Georgia, you have to actually live for the full tax year to be considered a resident. Here it's 200 days. Where they come up with these numbers, I have no idea, but that's what it is. Idaho's 270 days. So each state is going to have a different number when it comes to, okay, this is my residency for this time. Another thing that some states have and with each other are reciprocal agreements, right? Because what they don't want, or actually I want to say what they're trying to prevent, is you getting taxed twice for the same income, right? So these are the states that have reciprocal agreements with each other. All these other states don't. So California doesn't play with New York. So as you can see, they don't have any reciprocal agreements, right? So let's go over that matrix that I showed you earlier so you can see who has reciprocal agreements or not. This is really for more, like I said, the Northeast, because some of the states are so, bunched up together. In Texas, it's like 10 hours from one end to the other. And we don't have any state income taxes. So there's no point in having reciprocal agreements. But these states do have them because some people live in Virginia but work in DC, or work in DC but live in Virginia and spend some time in Maryland. It's all over the place, right? So let's just, so you can see what that looks like, go over who has reciprocal agreements with who. So let's start with New York, New Jersey, right? So New Jersey has a reciprocal agreement with PA. So basically, if you pay taxes in one state, you don't have to pay it in the other, or file a report in the other. But a lot of people do the New Jersey, New York thing. You still have to file the returns and let New Jersey know, hey, here's how much income I made, but I live in New York, or vice versa. Like, there's still some reporting requirements associated with that. Again, it's administrative minutia, but administrative minutia that has consequences, right? So in Virginia, Delaware, Maryland, DC, these are kind of the states that are the closest together. So as you can see, Virginia has reciprocal. My OBS studio, but I guess it reconnected. Okay. So yeah, so these are the different states. And then this one, 7. So this one has 7. Which one is it? Right here. Yeah, so Kentucky has 7, right? So it's right there. So the map says Kentucky has 7. Okay, so then another thing that I want to talk about is, so now you understand residency, you have to live 183 days on average, but every state is different. So you have to actually keep track of that stuff, right? Another thing that I want to talk about is everything I said regarding residency and state taxes. If you're a member of the military, doesn't apply to you for the most part. Depends on the state that you're in, but it's a completely different rule if you're a member of the active duty military. So let's go over some of that stuff. And each state is different. So you have to kind of look at the state's website and see how that's treated. Again, it's impossible for anybody to memorize any of this stuff. So you just have to kind of treat it on a case-by-case basis. So we're going to go over Connecticut, right? So as you can see here, if you are stationed outside of the state, your military income is tax-free if you don't own a home in Connecticut or visit for more than 30 days. So if you don't have a house in Connecticut and are stationed outside, then your income is tax-free, retirement pay is tax-free, survivor benefits is tax-free. Delaware follows the federal tax rules. So if your military income is X, then and you're in that state, then you'll have to pay income tax on that military income that you get. Retired pay up to 12.5 is excluded from taxes. That's just what the Delaware came up with. DC, they don't really care. You're paying taxes. I mean, that's just the way it is, right? Florida has no state income taxes, as we talked about. Georgia follows the federal tax rules. Retirement pay, not taxed, 17.5. That's kind of the number. Hawaii, military income follows federal tax rules. Everything else is tax-free. Military income, if stations outside the state, is tax-free. Tax-free for Illinois, Indiana, there's a $5,000 deduction. Tax-free is starting with 2024, right? So 2023, there was a deduction, but now 2024, it's actually going to tax-free. So as you can see, each state is going to be different. I'm going to put these resources on the video so you can see them. But let's state tax, income tax, like I said, it's a nightmare knowing everything at the same time. So check with your individual state or check with your local tax preparer so they can do the research and figure out how everything is taxed at each individual level and at each state. So as you can see here, New York, just from the length of the rules in the paragraphs, New York is always the most complicated. I would say California and New York are probably the most complicated states to be in when it comes to taxes, and the most damaging states to be in when it comes to taxes. So I would strongly encourage you not start any businesses in California or New York. I mean, unless that's what you have to do, but just know that you're going to have to pay a little bit of a premium. Let's see, Pennsylvania, Rhode Island, South Carolina. So these are the Texas, of course, a great state, has no income tax, so that's always good. So that's pretty much it for today. I just wanted to go over some real quick state rules. Eventually, we'll get into more. I do want to do some follow-up on the technology that the IRS is implementing, because that's always interesting to me, just the technology and how it's going to affect taxpayers. So stay tuned for that. As always, if you have any questions, shoot me a message. Don't forget to like, subscribe, and then if you have any feedback as to what videos I should, have in the future, just let me know, and I'll make it happen. Thanks again, and I will see you in the next one. Later.